Good morning and welcome to your Global Markets Briefing. Let's walk through the major developments shaping the day across the US, Europe, and Asia. Starting in the United States, Treasuries rallied overnight, particularly at the front and intermediate end of the curve. This move gained speed after a report suggested that Kevin Hassett, a former White House senior advisor, is now the frontrunner to become the next Federal Reserve chair. As a result, the yield curve steepened. Traders are still pricing in about 20 basis points of easing for December, with markets expecting around 93 basis points of rate cuts through next year. On the data front, US retail sales slowed down in September, rising just 0.2%. This was the weakest increase in 4 months and came in below expectations. The US Treasury's $70 billion 5-year auction was a highlight, clearing at 3.562%. The lowest rate since September 2024. Demand was strong, especially from indirect bidders. Meanwhile, the delayed producer price index bounced back by 0.3% month-on-month, keeping annual producer inflation steady at 2.7%. Adding to the conversation, Fed Governor Miran struck a distinctly dovish tone. He mentioned that the economy is calling for large rate cuts and pointed to rising unemployment as a sign that current policy is too tight. Now let's turn to Europe. The European Commission has indicated that the Eurozone's fiscal stance should remain neutral in 2026, which suggests no major tightening is on the horizon. Over in the UK, all eyes are on Chancellor Rachel Reeves as she presents the autumn budget. She is expected to raise several small taxes to generate up to £30 billion, while also introducing new measures to help ease the ongoing cost of living crisis. Looking ahead today, Norway is set to release its third-quarter GDP figures. In the US, we'll get the durable goods orders report. Markets are anticipating a softening in core business investment, although spending on AI-related equipment is expected to remain strong. With the non-farm payrolls report delayed, today's jobless claims data carries extra weight. Initial claims are forecasted at 226,000, and continued claims are likely to remain elevated. This reflects a tougher U.S. job market and the lingering effects of the recent government shutdown. We'll also get the Fed's Beige Book later today, which is expected to highlight weaker employment and slowing economic activity. Recapping the Asian session, the big story came from New Zealand. The Reserve Bank of New Zealand cut its official cash rate by 25 basis points to 2.25%. This signals a shift from aggressive tightening to more measured easing as spare capacity builds in their economy. The Kiwi dollar reacted by rallying to a near 3-week high, and equities also moved higher, though bonds sold off sharply. Down in Australia, inflation surprised on the upside, coming in at 3.8% year-on-year. This has reduced the market's odds of an RBA rate cut. Across the rest of the region, equity markets surged on optimism about upcoming Fed rate cuts, with Japan's Nikkei leading the charge. Gold hovered near a 1.5-week high, and oil prices were modestly firmer following renewed peace deal indications from Ukraine. So, what are the key headlines to watch for the rest of today? In the Asia-Pacific, we've already had the RBNZ rate decision. In Europe, we're watching for the ECB's Financial Stability Review, the UK's autumn budget, and appearances from several ECB speakers, including President Lagarde. For the United States, it's a packed data day. Building permits, trade balance, durable goods, jobless claims, Chicago PMI, new home sales, and finally, the Fed's Beige Book. On the bond front, new issues are expected in Germany, along with the US 7-year notes and Canadian 2-year government bonds. Finally, what's making news in the papers? Today's headlines highlight concerns around public finances in the UK, falling profits for major companies, and some significant developments in the energy sector. A few stories stand out. Spotify is reportedly planning to raise its US subscription prices. Tesla appears to be losing market share in Europe. JP Morgan has released a bold call, expecting oil prices to fall to 20-year lows. Volkswagen says electric vehicles can be made in China for half the cost compared to Europe. And the ECB is said to be investigating allegations involving Deutsche Bank. That's your global market wrap for today. Stay informed, stay prepared, and stay ahead of the markets. Have a great morning.